Alright, how's it going, guys? Welcome back. Creature Dewey back once again. Just wanted to say at the top of the video before I even get into it, if you're new to the channel, please leave a like and subscribe and share the video. If you like, it will really help me get my videos out there in the algorithm and it'll be a big help. I'm really trying to get this thing going, and if you could play your part, that would be a really big help. But anyways, what we got here today is more carbon tax hypocrisy exposure. So this got to be like my third or fourth video to do with the carbon tax, but they keep on saying there's no tax on groceries, there's no tax on groceries. Well, then why can you find how the taxation affects the grocery prices? So that's what we're doing here today. We're gonna show all these different, I got 5 queued up. I don't know, we're probably not going to get quite all the way through all of them. These will all be in the description below for us to read. There's some that I intend to get through, and then some that I will, move past, and I'll put them in the description. But if you have any comments about the video, anything that you enjoyed, anything that you'd like me to bring to light on my channel, please let me know in the comments section or get a hold of me on my X. Would be really great. Okay, but so here's what I suggest to people all the time too. So if you don't know something, you should just Google it and figure it out. So I was kind of curious about this. I've heard it a few times that there are taxes on fertilizers and manure for farming, which would be obviously an agricultural expense that could explain some veggie and whatnot prices starting to kick on up. But anyways, so it says here in the AI, in Canada, the production and transportation of synthetic fertilizers are indirectly subject to federal carbon tax, with those costs largely passed on to the farmers. Manure as a biological emission source is generally exempt from the direct carbon pricing at the farm level. So, fertilizers, yes. But manure, no. Because manure is just poop, so it'd be kind of like, that's made by nature, dude. So yeah, there's that. So there's a few things that play into the costs and whatnot. And so we'll read this here, obviously. While farmers are exempt from paying the carbon tax on gasoline and diesel they use for most on-farm activities, the tax still impacts the agricultural sector in several key ways. The production costs, the transportation costs, and the emission targets, okay? So we're not going to go fully into this. I'll leave this one to your leisure if you want to do that. But I'm not going to do a deep dive into that because I want to get into some of these other ones while I have the time. Okay, the Grain Farmers Bill from Canada's carbon tax on grain drying alone will be $100 million in 2022. So that's obviously a few years ago, but that's insane. The grain farmers have no choice but to dry wet grain before they market it, and the only available fuel is either propane or natural gas, as there is no viable alternatives. Fuel used for grain drying isn't the only concern for grain farmers. The cumulative indirect inflation of carbon tax on farm costs is estimated to be $14.50 an acre, and with that cost escalating by more than double in 2022, is to almost $30 an acre. The cost for rail and truck freight for shipping grain and fertilizer, as well as fertilizer itself, are all subject to carbon tax. and one out of these suppliers will pass along their carbon tax bill to farmers to pay. The additional costs of carbon tax cannot be passed along through the value chain. Farmers will be paying that tax and that tax on their suppliers out of their own pockets. The carbon tax is a direct hit on grain farmers' bottom line. Farmers cannot force suppliers to use alternative fuels, nor can we pass the costs on to the end consumer, says Gunter Joachim, President, Western Canadian Wheat Growers Association. We need the federal government to recognize the carbon storage that grain farmers create every year to offset this tax. This carbon price is more burden on top of global trade disputes and low commodity prices that farmers' income, said William Van Tassel, Producers de Grains de Quebec. Yeah, I'm not very great at French. So that's that. So this double shifted in 2022. So that's citing the land aspect of it, right? Now let's jump over here to the Canadian Taxpayer Federation. Great people over here. They're the best. Like, these people are unbiased. So it's not just going to be more honeyed words paid for by tax dollars through media talking pieces, state-ran media, right? Liberal leadership frontrunner Mark Carney recently announced his tax plan, and here are some key points. It's expensive for Canadians. It's even more expensive for farmers. Carney announced that he would immediately remove the consumer carbon tax if he became prime minister. That sounds like good news, but it's important to read the fine print. Carney went on and announced that he would be integrating new customer carbon credit market into the industrial carbon pricing system. Carney also said he would improve and tighten
we need to use
industrial
effectively a shadow carbon price
and impose carbon tax tariffs on imports into Canada. If that sounds like Carney isn't getting rid of the carbon tax, that's because he isn't. He's trying to hide the costs from Canadians by imposing higher taxes on businesses. What that means is Carney's plan would tax businesses, and the businesses will pass those costs on to consumers. It also means farmers. Under the current carbon tax, farmers have an exemption from the carbon tax on the gas and diesel they use on their farm. The hidden industrial carbon tax is applied directly to industry. Businesses are forced to pay carbon tax if they emit above the government's prescribed limit. But businesses don't just swallow the costs, they pass them on. The trucking industry is a great example. Due to razor-thin margins, the trucking industry, these added costs cannot be absorbed and must be passed on to customers, said the Canadian Trucking Alliance when analyzing the current Trudeau carbon tax. Boy, that's worrisome about where it is now. The same concept applies to Carney's scheme. If Carney removes the customer carbon tax and replaces it with a higher tax on businesses under the hidden industrial carbon tax, aka the shadow carbon tax or the fake tax, as Patty Haydu calls it, Patty fake tax, that means more costs for farmers. There isn't any exemption for farmers under the industrial carbon tax. Oil and gas refineries will be paying higher carbon tax, and they will be forced to pass that cost onto their consumers. Farmers use a lot of fuel. The pain doesn't stop there. Farmers also use a lot of fertilizer, and Carney's carbon tax means higher costs for fertilizers. Then farmers will be stuck paying for more fertilizer. So there's tax on the fertilizers. Alright, hey guys, what's going on? Just wanted to leave another quick video just to say leave a like and subscribe if you're new to the channel and you made it all the way to the end. Thanks for watching the video. I hope you have a oh, I did that. That's gonna but so thanks for listening to the video. I have a few other sources in the description that I didn't get to cover in the video. Please check them out as well. With that said, have a great day, guys, and peace.